Good day, everybody. This is Dennis Wilson with the Active Trend Traders. Welcome to the Art and Science of Active Trend Trading update for the 23rd of July, 2018. I want to remind everybody that all the materials we do present are for trading purposes only. Traders should always pay for trade any new method prior to the risk of their own personal capital. Our model at the Active Trend Trading is to help clarify, simplify, so we can all multiply what we're doing. This is a new feature of the Active Trend Traders. Well, we basically, in the past, I've been doing a, not final hour, but aftermarket Mondays. And I was finding it a little bit redundant and also a little bit overbearing, burdensome to have multiple live webinars during the week. And so we will continue on with our Friday webinar, which is making money trading stocks and ETFs. But we'll combine that and just do this Art and Science Active Trend Trading update to go along with the a little bit of a newsletter that I do every week, posted to the website, called the Art and Science of Active Trend Traders. This is a free feature for all, both premium and non-premium active trend traders. What is the objective of this video? Well, one is weekly update video to accompany the newsletter. Secondly, we want to do some market technicals, take a look at that. Potential bonus setups, if we have any of those. Other market driving events, and also then to do some tech tips. So today we're going to talk about a little bit about earnings. Earnings, a big one reported after hours today. That was Google. And the results were at least very positive on the initial indication. And we'll show a chart of Google here after hours. It leapt up very nicely. And then we'll take a look at a couple of earnings setups if we do have any, just to let you know what we're trying, what I'm trying to trade. Now, of course, our premium members will actually get the premium setups for the earning trades. But I like to share information, and take a look at some seasonality, gold, and biotechs. And then tech tip for this week is Fibonacci hidden levels. I want to talk a little bit about price levels and time levels. I'll do that really quickly. So let's see, what are we doing? Earnings. Okay, let's get back over here to a chart of the, here is a chart of Google. And look what happened after hours. As you can see, Google, and I'll draw a line in here to show you where we approximately are, here's where it closed, down here. So here's where Google closed. You can see that had a nice little move up today from bouncing off the 8-day moving average. Now, and then bam, earnings reported. They liked the earnings, took it up. How big of a jump did it go? Well, from about it finished up at 1205, jumped up as high as 75, so a $70 move on a $1,205 stock, about 6%. So when we talk about stocks staying within a 10% range, often during their earning, gaps after the earnings report, this is a perfect example of how that works. Now, we did not open a position in Google, but we're thinking, okay, what might that do for us for the rest of the week as we look forward? Will it have a positive impact on things? Well, if you look over here at things like, okay, well, what should it have an effect on? QQQs, which is the NASDAQ ETF, and what happened to it after hours? Did it respond accordingly? Sure enough, it jumped up from 179.50 all the way up here to about $1 move. So not a huge move, but something to keep our eyes on tomorrow. Now, the thing that I'm looking for, and just to be, even though it gapped up and will probably jump up tomorrow morning, look where it's jumping up to, right back into past resistance, 180.66. You can see that level right there. So what I've noticed over the years is that when things gap up like that, when they fail to actually break out above past resistance, and oftentimes that's set up for things to reverse and move back the other way. Now, there's a lot of earnings still to go on. Netflix had earnings a couple of weeks ago. Some of the others, but tomorrow, hey, we'll just wait to see what happens. If we bust out above, and I think if we go back to Google, Google's showing more or less the same type of deal here. Now, it actually, I don't know why that didn't, but let's try, here's where it gapped up from. There we go, which is right there. And so how far did it get? 120. So it would be breaking out above if we continued higher. So that's what we have going for Google. What are some of the other entities that we're looking at from a earnings run perspective? Well, Grub. If you are looking to trade the earnings on things like, you know, on Grub, on Google, is one, we put out a really nice little video a couple of weeks ago about how to do that, and I think we did a premium training on it. And the essence is we're looking for something that's trending, and we want to catch it somewhere between 2 to 4 weeks prior to earnings. And has it in the past also shown that it tends to run into earnings? And sure enough, things like our buddy here, Grub, as you can see, it would do a little bit of a run, even if it was only like 4 or 5 days worth of run, or a little bit longer than that. But the idea, once you've identified where earnings are, and you know that you have a stock that likes to run into earnings, trace back a month, make a note to yourself in your journal saying on, or even put it in your calendar and have it pop up and remind you of about 4 weeks before earnings. Take a look at the chart of Grub. Is it pulling back in an uptrend? Is it potential of a buy? Because as we see here, we have Grub coming up on 7:25 before the market. That's Wednesday morning. So from that point, let's go back. Yeah, let's go back to these. Let's go back 30 days and see where we're at. Well, is that 30 days? Yeah, it's about 30 days. And so as you can see, not an uptrend. However, go back just 2 weeks. There we go. That is approximately 2 weeks ago. Let's say, yeah, about 18 bars. I'm not getting the full thing there. But about 18 bars. And that's where, let's go from here to here. There we go. You can see 27 days. So it was 18 bars. So about 30 days ago, Grub was showing a really good potential buy signal. So just pay attention to that. These type of trades repeat themselves over and over and over again every earnings season. So what are some of the ones that we like to watch? Well, Baba's coming up. Baba, really nice hammer. On today's chart, we're right at the 200 day, yeah, 200 day moving average. You see that 200 day moving average, and so are we going to basically? Is it going to make a stand here and then start its run into earnings? How long does it have until earnings? Well, one, if you go here to what the TOS chart says, it says that the earnings are 8.2. However, go to the option chain, and it shows the volatility starts to pick up around the week of 8.17, which corresponds with the whisper numbers that show earnings on Baba are coming up on 8.15 before market opens. And so we'll be looking to jump into a position on this. Again, is it an uptrend? Yeah, basically, is it pulling back from an uptrend? Yeah, it is pulling back. It is almost back here at the 183 level. May not get to the 183 level. It's got a lot of overhead resistance or ceilings to make it break back through. But oftentimes, what are we looking at in what are we looking for in these trades to the upside or pre-earnings? Somewhere between 5 and 10%, especially if you're getting the full month's move on it. What's another one? Tesla got actually absolutely beat like a redheaded stepchild today. However, it did wind up at support, which we highlighted previously, about 295, puts in a nice hammer after a gap. Now, is it going to reconstruct itself in order to climb back up? When's earnings on that? 2 weeks away, August 1st after market. So Tesla's one of those. Longer term, Tesla's been kind of in a sideways, but its daily and weekly moves are so large that oftentimes, if you catch them at the bottom of the move, you can pull in a nice little profit. Today's move was about $11.53. But it was a wild ride. You just hope you can hold on for 8 seconds or 7 seconds. I can't. Got to check in with some of my bull riding friends. Or my old bull riding friends. They don't ride bulls that much anymore. Let's see what else we got here. Some of the other things we're looking at is I like NVDA. NVDA. Again, it too, really nice. Buyers came in right where you expected. And this is another really good, this is kind of a bonus tech tip, is when you're looking at something that has come out of a base, go back to those past highs where it broke out from. That's where the buyers came in and took control of the situation, pushed it up higher. Well, bam, again today, buyers came in right at that level, the 244 level, and pushed it on up. $5 worth of push up from there. Now, if we get a push up higher than that, that would make a good opportunity to get into a free earnings trade. When is earnings? 8-9. So 8-9 is approximately about 3 weeks from now. So we're in that range. What else are we looking at? Well, I looked at previously looking for something to do in with team. It was team. No, it was grub with team. Yeah, team. Similar type thing. Team's coming up really quick here this week, and it's this Thursday after market closes. And so if you do jump on one of these, pre-market, pre-earning trade, and earnings are just 3 or 4 days away, basically reduce your expectation. Instead of 5 to 10%, look for maybe 2.5 to 5%. If it's moved today on team, let's see how far it moved. You need the right decline, as they say here in Hawaii. So as you can see, it's got about a 2.5%, no, about 3%, 3.8, almost 4% move range on team. So you could, we're going to expect, hey, this could, move nicely. On the daily chart, it looks like it wants to roll over, though. We see here, but like I said, it is in a nice little uptrend. What does the intraday tell us? Intraday tells us that basically it has reached its high. We'll see if it pulls back a little bit from that where we, 66 or even back to the 65, 60 level. It was a sell-off today, though, in team, along with a lot of other things. We're just, kind of moving towards the bottom. So that's what we got. NVDA recovered. So those are the pre-market trades that we're looking at. Now let's take a real quick look at what else we want to take a look at. We want to take a look quickly at seasonality. So seasonality in gold. Basically, here's where we are. The seasonality in gold shows that we should be getting down to this area here. We're almost at the end of July. Gold, this is the pure tendency chart based on 40 years worth of data and also 15 years worth of data. And both of those time frames showed that in the last couple of weeks of July, we'd wind up getting a bottom in this. Now, what I've done in my research is I've noticed that tends to happen somewhere between here and here. It's got a little bit of a window that it can break up at. But this year, gold may just be following exactly after what this is doing here. And so just so keep that in mind. It certainly looks like gold wants to turn around. And so how can we trade that? Well, you can trade GLD and or you can trade something like JNUG or Nugget, the NUGT. The other time to be paying attention to gold is getting into the end of the year. There tends to be always a nice little pop-up run. Both of these on GLD and the gold index tend to be somewhere about, an 8 to 12% run during that time frame. So what does that mean? Well, it basically means you're going to get a really good move on GLD. You'll get even a better move on the leveraged ETFs. So that takes care of gold. The other one, biotechs. Biotechs also tend to do a little bit of a peak at the end of July, pull back into August, and then rally through the end of the year. Now, are we going to get that out of biotechs? I'm not sure. Let's take a look at the two. Biotech stocks that we do, in fact, or ETFs that we do watch. Okay. I go here to LABU. First, I'll go to the biotech, S&P biotech. And as you can see, what is going on here is we bounced off the 100-day moving, 100-day moving average, moved on up on a daily basis, and then basically is at a level of resistance where it has, failed to break through in the past. Is this an all-time high for this entity? As a matter of fact, yes, it is. So that, in reality, there is, other than these previous self-made areas, no levels of resistance above this level. It breaks out again. But as we see, it is driving sideways. I have to consider this to be kind of a bullish flag. And oftentimes this is a sign of real strength. And that flag up, or flagpole up, drives straight, almost straight sideways in a trading range. We're waiting for it to pop up the upside. Now, occasionally it does pop out the downside. And so you also have to be ready for that. And that's where we go and look at LABU, which is the leveraged ETF. And where might it go? It basically, it's stuck in that same range. So if it breaks below the 104 level, or if it goes back up here and retests the 113 level, that's where we'd want to look at, probably jumping into the leveraged inverse ETF, which is this one, 232 LABD. And again, that's what, if it pulls back into the 2153 level, 2150, that's where we would like to see that go. To the upside, this looks like it's stronger to the upside, or like it wants to move to the upside. The other one looks like it's at the top of its range. But remember, it can jump higher than that. Gold, here's what we're talking about with gold. The thing to watch on gold. Okay, we now know where the buyers came in. Excuse me. At the support that it found back in July of 2017. It held that. We have a support, another support zone here. Again, TSI weekly chart has not turned back up yet. And that's one of the things I'm kind of waiting for. Don't have a pure reversal candle on gold. This is, yes, this long wick bottom shows that's where buyers came in, but it's not really a hammer because the body is greater than 2 times the level amount of the wick. So right now we're getting a little bit of a pullback again. Again, gold is in a downtrend. Now we're anticipating getting a move back up, and when that happens, we'll see where where we bounce from there. But oftentimes in this July move, let's go back to the last July move, which is back here. We went up 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks in a row. And so if we went up 9 weeks in a row from where we're at right now, just pull out your handy dandy little You go 9 bars. There, right up there. And so where's it going to put us? So it's going to put us about 917, which is the middle of September, where we expect gold to turn around anyway. And it did it last year, 9.4. Actually got started with the move a little bit earlier on 7.10 last year. So I'm so tired of waiting for gold to move, but I know it's going to move. And if it doesn't move, hey, we get ready for December. That's fine. So, okay. Hey, let's take a look really quick at, I want to show, I'm going to go over to SPY. I'm going to go over here to the Qs. And I'll talk just a little bit about this concept called pullbacks and how the pullbacks work. I want to take a look at, on a daily chart, I want to take a look at just the straight pullbacks within a move. Okay, so you take your fibs, and this is just a retracement tool. Go back up to your highs here, and where is fibs likely to retrace to? Well, oftentimes what we're looking at is at least a trace back to the 38% retracement. The 30, 50, and the this one is the 61% retracement. That magic fib box is usually where things retrace to. Sometimes they can overshoot and drop higher. We can lay this one on top of here. And where did that one pull back to? Get rid of that one real quick. This one actually pulled back to the 78% retracement. Didn't spend much time on it. But when something pulls back that deep and stops, look how close it stopped, right to that level, then starts breaking back up through the past levels, especially when it's sitting on top of what? The 50-day moving average. Those other levels on the Fibonacci can work as triggers for you to get into a long trade. And that's fine. Our rules account for taking trades off of supports, and that's a great way to take that trade. Plus, we had the TSI turning up, all the rest of the thing. The other thing that I have been studying here for quite some time now also is the concept of timing for your lows or timing for your highs. And I don't know if Q is going to show it as well as, yeah, there we go. Let's take a look at the spiders real quick. And here's a perfect example of, let's say I'm gonna draw a little box here, and we went up and made a new high on the fibs here. And I'm going to get rid of some of these. Okay, so right now the S&P is staying above the 236, but I'm going to get rid of that. If you're wondering how to get rid of these, you just Control, click, it's gone. So there's my 38. We get rid of that one for right now. Get rid of this one for right now. Get rid of for this one. So clean up the charts a little bit. Then on top of that, what I want to do also on top of that, as you can see, this little box defines my my fib box. But on top of that, what I want to take a look at also is, well, what about my time Fibonacci's? And so what I'm going to do is go here down on, I pull up my drawing tools, go to Fibonacci time extensions, right there, and I can do a couple of different things. One, I can basically measure my amount of time it took me to do my individual, up to the high, back down to the low. So I can do a couple of those. I can do one here. And I like to go back to an earlier time frame to see how close did it get to past numbers. And as you can see, to determine symmetry. And I'm looking for it to pull back somewhere between the 100, well, about the 123, which is this one right here, and the 1618. That's where we'll tend to, somewhere in there I should hit another bottom. Sure enough, it did. Now I can do another line in here. Remove that one. Do another one. Up, same. Find the top. Yeah, that's a good top. Either one of these tops is good. Stretch that over. Now, on this particular one, what it did is it highlighted where my high was, but as you can see, 2618, a fib number, a solid fib number where it finally reached its past low and then rebounded. And so just being aware of those, you can also overlay your fibs. You're going to overlay your fibs. What am I doing here? Let's get rid of that. Okay. You're going to overlay your fibs. And so let's take this next one here. This is from here to here, approximately, then to here. Now what that tells us is that we should run into a high somewhere about 100%, and then we should run into pull back into an area that's about equidistant here. One of the other tools of this trade is basically go to your lows, connect those. And now that we have that, I'm going to go ahead and get rid of this old one, get rid of this one, remove that. And so oftentimes the period of time between our lows is more accurate for predicting where your next low is going to be. Now, it doesn't mean we're going to project that, the exact places down. But if we go here to this time fib extension right here, which is your 123.6, look, and then put it in that box. That gives us a pretty good time frame. And then I drew in the yellow box to say, hey, that if we get a pullback that drops down to this level, into the magic fib box, about that time frame, sometime between this time, there we go, and the 1618, this time here, and it tells you exactly what date it's on, 8/7. What date's this one on? Well, 7/30. So somewhere between 8/7 and 7/30, we would anticipate if we get a return back down, lower, that the pullback that's where it would happen. Now, what that does is just gives us additional information to go, oh, okay, that may be where things, pull back to and reverse. And we have a little bit more data to be able to understand where where to anticipate something happening. Now, does it mean every time something's going to happen there? No, not really. But what it does do is it gives us more clues than we had by just looking at a naked chart. Because the naked chart is basically saying, okay, yeah, we see the symmetry, but how can you project exactly where the symmetry, where the symmetry is? And so from that, good stuff. Another way, if you just want to do it the poor man's way, you just measure from here to here. Then take that, activate it, pull it over, and say, okay, approximately here is where we should hit another bottom. What does that work out to? Well, as you can see, 731. Interesting how that works out. So, okay, hey, I'm going to close down. I'm going to finish this up. Let's see what else I have here. I basically have nothing. Here I am getting ready for the doing the midweek market sanity check. Trading session for this coming Wednesday evening. We'll be talking about planning your triggers for entering trades. So let me know what you think about this format for the art and science of active trend trading, and we'll continue to do it. I'll try to shorten it up a little bit, but I'm trying to give some really good tech tips and also a couple of potential trading opportunities. And that takes too much of your time. That way you can view it at your convenience. You don't have to catch it live. So with that, I bid you adieu. God bless everybody. And just so that you know it's really me, hey, aloha.